Hello guys and welcome to another video. So in this video I want to show you exactly how I made 1,300 euros or 16% profit on my personal account. So we will take a look at the trades on the PC, I will analyze the trades, tell you why I took a certain trade, why I stayed out and everything like that. But before we analyze the trades, I want to talk a little bit about false expectations. So you may see this video, especially if you're just a beginner trader, and you may think to yourself, okay, this guy is making 15%, 20%, 25% every single month. Now that is completely not true. Those are some false expectations given to you by some fake Forex influencers. What is the reality of trading? Well, the reality of trading is that most months you will either be break even, maybe a little bit of in a positive or maybe a little bit negative. So most months you will not make any money, and then you will have maybe 2 or 3 or maybe even 4 of these big months, 10% profit, 15% profit, 20% profit, which will first cover all of the losses and second make you all of the big profits. So if you're just starting to trade, it is very important not to have false expectations, especially when you see videos of people making a lot of money in 1 month. Again, yeah, you can make a lot of money in 1 month, but in a period of 1 year or 5 years, most months you will be either break even or maybe even in a bit of a negative. So you're basically waiting for those 2 or 3 months to get that major percentage for you to actually make money from trading. What are some of the realistic expectations when it comes to Forex trading? Well, I would say with 2 or 3 years of trading experience, you can make around 40% profit in 1 year. So don't think that I make 16% profit every single month, because that is completely not true. The last 3 or 4 months were actually around break even, some were even negative for me. One huge month I had was January this year. I made a lot of percentage, and then now October as well I made a lot of percentage, but everything in between was very either small profits or losing months. Okay, so now that we covered false expectations, let's get into the analysis of the trades. Okay guys, let's take a look at the trades that I took in the last month. So let's start with the euro and the US dollar. I do trade 6 Forex pairs, so those are euro US dollar, EJ, Aussie US dollar, Aussie JPY, pound US dollar, and the New Zealand Japanese yen. This month, euro US dollar has been really good. Okay, so let's start with the 1st of October. Let's find it and let's take a look at all of the trades that I took in the live markets. Okay, this is the first trade. So let's go with the replay function and let's see what was happening here. So for me personally, what I was seeing is I was seeing a start of a nice downtrend. I was seeing first this sort of a V reversal and then a range. Usually after you get a V reversal and the range, it starts a nice downtrend and you can look for sells. So this to me already had an indication price will go down. It's not the cleanest, so it's not the cleanest of V reversals, but it does look sort of like a V. What was the selling point was this selling pressure right here. Consecutive red candles going down. The closes on the candles don't really print a lot of wicks. So when there is almost no wicks and when the candles are this large, I can expect further downside like this. Then what happened? So large impulse, 1 candle pullback, no buying pressure in the pullback. We break the low, continue with the nice clean close, nice big bearish candle. I then set my order with a 13 pip stop loss for a break and retest trade. So usually in backtesting I test with 12 pips, but in live trading, because of the spreads, I do add a pip. So I use a 13 pip stop loss and I put my order 1 pip above or below the entry level, just so that my live trading mimics the backtesting, because we know in backtesting you cannot really see the spreads accurately. Okay, then what happened? This candle tagged me in, almost took me out, but I still had enough room to be in the trade and price started moving to the downside. I then followed the trade with the trailing stop loss rule that I use. Basically, I moved the stop loss underneath the most recent highs and then we went down even more. I put my stop loss 2 pips above this most recent high, just again for the spreads, because price does like to tap this area and then drop. You do not want to be taken out by 1 pip and then for the price to continue trending to the downside. That's why I used 2 pips above and then I got taken out for 1.78%. I did risk 1% of my personal account on this trade. I actually risk 1% on every single trade, and it doesn't matter if 6 setups set at the same time, I will take all 6 of them with 1% risk. That is kind of what happened. You will see later. There are a lot of trades that happened on the 2nd of October at this exact time, and I took all of them. Okay, so that was the first trade. Nice winner. Let's go back, let's find the next one. So the next one is right here. It was on the 13th of October at 6 o'clock in the morning. So this is the London time zone, I believe. And again, we're still sticking on the euro and the US dollar. Let me show you exactly what I was thinking with this setup. So what is really important with the strategy that I trade is, of course, the prior price action. And in this prior price action, I was seeing a clear ascending channel right here. After an ascending channel from my backtesting, I know most of the time this reverses and starts trending in the opposite direction. So when I saw this ascending, I was expecting a downtrend, and then we got the confirmation. So you always need to look for a confirmation as well. What would be the confirmation? Well, it is right here in this bearish leg. Huge move down, small 1 candle pullback or 2 candle pullback, absolutely zero buying pressure, and then we continue with some nice candles. You can see the size of these candles, and the wicks are not that large on the ends of the candles. So I not only look at the overall price action, I also look at the candle formations. There are some formations that signal a range, and there are some formations that signal a continuation of the trend. This type of candle is my favorite. This one as well. This one with a huge wick up and huge wick down is not the best. It usually signals a range, but the body is good. What would be a very bad type of a candle? Well, this one, for example. Let me zoom in. So small body, huge wick up and a wick down usually signals a range, which we did get in the end. We got a range. Let me find another example of a very bad candle which signals a range. This one. Okay, these are usually news candles. Usually you get a wide range after you see a small body, large wick up, huge wick down, so not a good sign. Okay, let's go back to our trade. Let's see what happened. Right here we continued, and I did not set my order just yet for a break and retest because I wanted to see a slower pullback to my entry level. Okay, my entry level is right here on this low, but I actually used a new type of an entry called a timed entry, which is something that my friend developed, and he wants to keep it private for now. So I'm not gonna go into it too much, but basically it's sort of a break and retest flag mix, and it's connected with trading sessions as well. So you have the London session, New York session, you have the Asia session. Yeah, so all 3 of the entries are all 3 of the criteria are combined for this new timed entry. Again, I'm not gonna go into it too much, but I'm just gonna tell you that I was seeing absolutely no buying pressure here, or I was seeing a little bit of buying pressure, but I was still happy to take a sell trade, and I did enter at around this level. So this was around 1.05478. That's kind of the level I entered on. And then what happened? Well, I almost got taken out. I used a 13 pip stop loss here, so not a 12 one, 13 pip one. Almost got taken out, and then price dropped to the downside. Okay, what happened then? Well, actually right here, let me replay it just a bit more. This was around 6 p.m. London time. So we know that there is a war, Israel and Palestine, and the markets can be very volatile, especially during the weekend. There can be large gaps. So this was the market close around here. So this was the market close, and we could have seen a gap like this, and I could have been taken out for much more than I actually risked. It happened to me before, or actually it did not happen, but it could have happened, and I could have been taken out for -3, -5% because of the huge spreads and the huge gaps. So what I actually did, I closed on the close of this candle. right on this level on the close of the 6 p.m. candle on a Friday. So to avoid the weekend risk, to avoid holding the trade over the weekend, I did close it early because of the war. For how long will I be doing this? I'm not sure, but at least for the next few weeks, maybe next few months, until we see some sort of, let's say, calming down of the war or the market conditions becoming less volatile or the gaps not being that big, then I will consider holding the trades over the weekend again. But for now, I will be closing all of my trades on Friday evening around 6 p.m. If I held it over the weekend, there would be no huge gap, so I would not be taken out by spreads, I would not be taken out by a gap, but I would be taken out for a bit of a loss, because my stop loss, according to the trailing stop loss rule that I use, would have been 2 pips above this most recent high, and I actually would have been taken out for a really small loss. So it's good that I did close early, but again, it's pure luck. Sometimes it's gonna go my way, sometimes I'm gonna lose on percentage. What could have happened? This could have opened like this, and then market could have just dropped 100 more pips, and I could have lost out on, let's say, 10% or a 15% trade. So this time I actually profited, but next time I may lose out on major percentage. How much did I make? Around 3.27% on this euro US dollar trade. Okay, let's look at the next one. So this would be the last one on EU. Again, very nice pair this month, very active, very nice setups as well. Let's take a look at the final trade on the euro and the US dollar. What was I seeing? So again, same sort of methodology as on this setup right here. Ascending channel, not as big of an ascending channel, but still correctively moving up, especially right here on the top, where I was seeing price breaking the highs, retracing, breaking the highs, retracing. You can see price is struggling to push up, and then we reverse to the downside. And of course we get the confirmation, which is really important. Always look for a confirmation, and the confirmation would actually be this bearish leg right here. And you, again, just look at the candles as well. Large red candles, nice clean close here, nice close here, nice close here. Again, small wicks, but not really major wicks like we saw, for example, these wicks or these wicks. So this looks very nice, and this looks very high probability to sell. So this was a pullback candle, one candle pullback. A bit of buying pressure. Was it a concern? No, because of the prior price action, because of the overall look of the momentum, because of the look of the candles. This was actually not much of a concern, and then we break the low. Momentum continues, nice close on the bottom, and I was happy to set my order for a break and read this trade. 13 pip stop loss, order is 1 pip below this inside bar or this most recent low, so a bit lower like this. And I got taken in by a few pips, and price continued dropping to the downside. So this was a very nice setup. Again, would I have taken this flag? I would, but because I was already in a trade and it was still open risk, I still have not reduced my risk. I could not have taken another trade, because at the time on one pair I only have max 1% risk. So if I opened another sell trade here, another flag, this flag trade, and if price went up, I would have been taken out for minus 2%, which is something I do not want to be doing. So basically I did avoid taking this flag. Then what happened? Price continued dropping, and I kept following the trade, placing my stop loss 2 pips above the most recent high. Price breaks the low again right here, moves down even more, and breaks the low, pulls back, breaks the low again, and I move my stop loss 2 pips above this level, above this most recent high, and I get taken out for around 5.43% on this euro and the US dollar trade. So really nice setup, really nice trade. Is that it for this pair? I believe it is. So we can move on to the euro and the Japanese yen. Let's go to the 1st of October. Let's see. So I think there's, yeah, 2 trades on this pair. This setup happened at the same time as the euro and US dollar. This one looked even better. This one looked even more high probability. Again, you have this ascending channel right here on the 1 hour chart. I look at only one time frame. I look at only the 1 hour chart. Breaking the highs, retracing, correctively moving up. After this sort of formation, price usually reverses in the opposite direction. How can you test this? Well, go on your charts, go back the last 3 years, go on the 1 hour chart, find all of these ascending or descending channels and see what happens after them. So just mark them on the chart and then see if the price will reverse. You will actually notice most of the time price does reverse in the opposite direction and you get a nice trend such as this one. Push down, pull back, 1 candle pullback. We continue, 1 candle pullback, 0 buying pressure, break the low, nice clean close. All of these candles look really, really good. So no wick, a little bit of a wick, no wick. I was 100% happy to set my order on the low of this inside bar, 13 pips stop loss, got taken in, price breaks the low, continues, and then I just followed the trade with the stop loss trailing rule. Okay, place it above the high, place it above the high again, and then get taken out for around around 2.6% on this euro and the Japanese yen trade. Very nice trade, happened at the same time as euro US dollar. Again, if they happen at the same time but on different pairs, I will take every single one with a 1% risk. That's how I trade, that's how I do it. Is it the right way? No, it's the way I like it. So there is no right way to trade as long as you make money overall. But there are some ways which you will like more and some ways which you will like less. You need to tailor the approach to yourself. You need to discover your edge and you need to see what works for you. Again, there is no wrong way to trade as long as you're making money. There is no right way to trade as long as you're making money. Okay, there are some wrong ways. There are definitely some wrong ways to trade, but no one is perfect and no one can tell you exactly what you should do. You should experiment, play around with it, and then you will discover what works for you. There are some general guidelines, but again, you need to discover what works for you. Next trade on EJ, I believe that's the only one left on EJ. Let's see what was happening. Okay, so what was happening is, again, same as euro and US dollar. We had this ascending structure. After that, I do expect price to reverse in the opposite direction, and it's not really strange for 2 euro pairs to set up at the same time. It happens. So then impulse, pullback, impulse. Again, this is not really such a good impulse. You can see printing wicks struggling to go down, so not the best. But to be honest with you, with the prior price action, with this ascending, and with this being an established downtrend like this, I was happy to look for a sell setup. What is an established downtrend? It is a push, pullback, and then another push, which is exactly what we have here. So I was happy to take the 1% risk on this flag formation, which you will see right now. Yeah, this is the entry. Okay, let's zoom in just a little bit for me to show you. Flag formation, first low, first high, second low, second high. Why is it called a flag formation? Well, because it kind of looks like a flag. This is the pole of the flag, and this is then the flag formation. Okay, there is a little bit more nuance, a little bit more technicals that goes into it, but again, it kind of symbolizes a flag, so we call it a flag. Enter on the first red candle, on the first bearish candle. Okay, let me just adjust it a little bit so that it's right on the line. Oh, so it needs to be, no, 12 pips. So I only use 13 pips, or I only add a pip for the break and retest setup. For the flag, I do a market order execution with a 12 pip stop loss. Break and retest is a buy limit or a sell limit. Flag is a market buy or a market sell. Okay. Price takes me out, 1% loss on this one. Again, nothing to cry about. I'm gonna take losses. My win rate is on the lower side. It's around 20 to 30%. So actually most trades I take will be a loss, but my winners are far, far bigger than the losers. So in the end, I do make some really nice profits. So yeah, this was a loss. What is then the net profit on this pair? So around 2.6 minus 1, so around plus 1.6% on this particular currency pair. Moving on, we have the Aussie US dollar. This one was not that good. I did take some losses. Okay, so let's find the 1st of October. Okay, so this would be the 1st of October, and then the first loss, I missed a trade here. Missed a nice winning trade. Why did I miss it? Well, I got my technicals wrong. I wasn't looking at it the right way, so it was a technical mistake on my part. And yeah, it happens. It happens, but it doesn't matter. Overall, I'm still profitable. Overall, I'm still making money, even if I miss a 4 or 5% winner here and there. Okay, so it's nothing to cry about. Let's take a look at this losing trade. So we have a large ascending structure. You can see I really like to trade ascending and descending channels. After this, we do expect the price to drop to a downside, which is exactly what happened. So price clearly dropped, clearly showed some large bearish pressure right here. And you can see consecutive red bearish candles going down, and you can see a nice clean close here. So the candles look good. They don't look that good, but they overall look like they have some really strong selling pressure. A bit of a wick on the bottom, but not really much of a concern. The flag starts to form. We break the flag high, and let's find the entry. Okay, still nothing. This is the entry. Okay, so yeah, one small wick, this bit of a large wick. Maybe you could say that this is buying pressure. For me, look, I was happy to take the trade because of the prior price action. As I said, prior price action is the most important thing for me, for the strategy that I trade. If the prior price action is right, in this case it's looking very high probability to continue going down, I can tolerate a lot of warning signs in the entry. So the entry doesn't matter as much as the overall price action matters. Entry is only here for me to take advantage of the prior price action and the overall market condition. Okay, so put in a trade, market sell on the close of this candle right here, and get taken out for a 1% loss on this particular trade. So doesn't matter, 1% loss, it happens. And then we continue. Let's see the next one. Let's just make this a bit smaller. The next one is also a flag formation and was also a loss on the Aussie US dollar. Okay, let's see what was happening. So I was seeing a nice ascending structure again. And what I know, Aussie US dollar likes to do this. Basically what it does is you get a push down, ascending, push down, ascending, push down. So it definitely likes to trend in that sort of a manner. Nice ascending, after which we do expect the price to drop, which it started doing. It started definitely trending to the downside. Nice legs, again, not the best, not the cleanest. Why? Well, wicks, a little bit of wicks, pull back here, large wick, momentum shifts, definite buying pressure. Then we continue with the selling pressure. A bit of a wick here as well. Let's see the flag. Okay, this is the flag. So first low, first high, second low, second high, and the bearish candle is the entry candle. Market sell on the close of this candle. So you may be saying, okay, wicks, double wicks here, possibly momentum shifting to the upside. But for me, again, prior price action was high probability. I was happy to take the risk. It was Thursday. I know Mondays and Tuesdays I'm a bit more careful. Wednesdays, Thursdays, Fridays, if the prior price action is right, if there is a trend, I'm taking some warning signs, and I really don't care about the warning signs. I want to exploit the good price action. I want to get in on the trends. Overall, on a large enough sample size, it does play out, and it does make financial sense as well. It does make some really nice profits. So got in here, and got taken out for a 1% loss. And then price, I believe, started to range around. So again, 2 losses on the Aussie US dollar doesn't matter because my winners are far bigger than the losers, and all of the profits from Euro US dollar, all of the profits from the Euro Japanese yen pay for these losses on the Aussie US dollar. Okay, let's move on. Just see, yeah, so that's it for this one. Aussie Japanese yen. Let's see how many trades I had here. So let's go to the 1st of October. Okay, so only one trade on the Aussie JPY. Only one trade here as far as I can see. Yep. Let's see what was happening. So this one, it happened at the same time as the Aussie US dollar. Again, Aussie pairs move at the same time. So it's not really strange to get the same sort of a setup on 2 different pairs at the same time. Okay, ascending structure. I think you remember all of this from like 2 minutes ago. Push down, pull back, push down. Not the cleanest of moves down. What I don't like about it, to be honest with you, is this momentum shift. But selling pressure kicked back in again, and I was happy to take a flag entry. Let's see it. Let's see the flag right here. First low, first high, second low, second high. Like this. Red candle is the entry candle, market sell, and then what happened is I got taken out for a 1% loss. So I would actually say this is a bit worse formation, the entry formation, than the Aussie US dollar. So the wicks are a bit bigger and there is a bit more shift in this candle. It looks very, very similar, but this one looks a bit worse. So possibly I would not take this one again, but I would take the Aussie US dollar again. And when I looked at the trades, when I did my review of the trading week, I actually noticed that before entering the trades, I wrote down Aussie US dollar looks good. I gave it a nice 9 out of 10, but Aussie Japanese yen does not look as good. I gave it an 8 out of 10. Usually an 8 out of 10 for me is not a good trade, and most of those lose. So even in my pre-trade notes, I wrote down Aussie US dollar looks a bit better. Why did I take both in the end? Well, because I got a bit greedy, I guess. I did not want to miss out if Aussie Japanese yen started dropping as well. So I would possibly not take this one again. It doesn't look that good, but it's not that bad either. Okay, so it's right there on the edge between being valid and being a high probability setup. Pound US dollar. Okay, let's see. 2 very nice winners on the pound. Let's see the 1st of October. Okay, 1st of October is here. First trade. Again, should I go over this one more time? I'll go over it very quickly, but this is the same sort of setup that happened on the Euro US dollar, Euro Japanese yen, Aussie US dollar, even Aussie Japanese yen. So same sort of setup, same sort of entry happened on almost every single pair that I trade, except New Zealand Japanese yen. That one had zero, that one did not have a setup at this time. So this was 2nd of October, 6 p.m. London time on the 1 hour chart. So check it out, look at your currency pairs and tell me if you got an entry here as well that looks similar to this. So yeah, 4 entries happened at the same time. I'm taking all 4. That's the way I trade. So 4% risk. If all of them go against me, I will take a minus 4% for that day. I do not want to mess with the probabilities. That's how I backtest. I backtest only one pair at a time. So I must follow the probabilities from my backtesting. I must not interfere with those probabilities by picking and saying, okay, I'll take the pound, but I won't take Aussie US dollar, or I'll take EU, but I won't take EJ because for some reason this one looks a bit better. Okay, so I must take all of them if all of them fit my plan. Okay, let's continue. So, established trend, established downtrend. What do I mean by that? Push down, pull back, no shift, push down, pull back, no shift, push down, clean close, clean close, clean close. Almost no wicks to the downside, selling pressure all the way, zero buying pressure, which is really, really important. Set my order, 16 pips, 15 pips, plus 1 pip for the spreads. look at these two wicks as well. Very, very nice. Huge wicks to the upside, signaling major selling pressure, signaling that the buyers cannot win this game. So the sellers are clearly winning. This is exactly what I was saying about the different flag formations. So check out this candle right here. This candle right here, which is this one, usually continues to the downside. So that's a really, really nice sign that price will continue trending to a downside. Again, I not only trade patterns, I not only trade overall market condition, I not only trade ascending or descending channels, I also look at the individual candles, seeing what they are telling me. Okay, set my order, got taken in, and then just follow the trade with my trailing stop loss rule, 2 pips above this most recent high, and get taken out for around 2.32% winner. So very nice trade, very nice winning trade on the pound. Okay, let's see the next one. That was that one. Here, no entry for me, no valid entry for me. And then the next one is right here. So let's take a look at it. This one was really, really nice. I'm really happy about this one. So this one happened at a very similar time as the Euro US dollar. The formation looks very, very similar as well. I mean, it's not strange. Both of them are dollar pairs. It's gonna happen. We have this ascending structure. What did we say in the last 20 minutes? Ascending structure, usually you get a drop to a downside. So any sort of an entry that happens on this downtrend is very, very high probability to take. But we need to wait for confirmation. What is confirmation? Confirmation is this one really large, this is still part of the trend because the low is, so this low is 104, this one is 103. All of this is part of one move down. Okay, and that's exactly my confirmation to look for a flag entry right here. Okay, let's see what happens next. Okay, price starts forming the flag. This would be the classic flag entry, but I again applied the timed entry, which I talked about. I'm not gonna reveal how to do it, I'm not gonna reveal the details, but I did get in on a timed entry. It's connected with the London session, the New York session, and the Asia session. So yeah, I may make a video about it in the future, but for now I'm gonna keep it under wraps because my friend wants to keep it. He wants to keep it private because of prop firm reasons. If I share the entry here, then a lot of people will take the same entry, and prop firms will start flagging people for taking the trade at the same time, at the same level. So yeah, what we're trying to do is we're trying to make different sort of entries that not a lot of people are using, so that the prop firms cannot say, look, you're trading at the same time, at the same level as 10 other people. Okay, so that's the reason. Yeah, so I got in around this level. Let me see which level, 1.21711. That's the level I put in a market sell with a 20 pip stop loss. I use a 20 pip for the flag formation on the pound US dollar. That's what I use. And then price just started dropping. Very nice downtrend. You can see exactly the power of ascending channels. Okay. I just then followed the trade with my trailing stop loss rule. Again, still in it, just moved the stop loss. So my stop loss was here, then it was here, so currently it's here. And then pull back, break the low, meaning I can move my stop loss on this. I think it was, actually I moved it right here because I actually reduced my risk during this live candle, and it first broke the low and then it broke the high as well in the same hour. 2 pips above this level, and I got taken out with this candle. So it broke the low, I reduced my risk or put my stop loss into profit, 2 pips above, and then the same candle that broke the low broke the high as well, took me out for around 4.31% on this trade. So the net percentage on this pair was 2.32 plus 4.31, so that's what, 6 6.6, something like that. So made around 6.6% on the pound US dollar, but you have to count in the commission, you have to count in the spreads, you have to count in the fees and all of the things that go with trading a live account. So the broker takes a big cut. I mean, it really eats into the profits. It's like 10% of the profits at the end of the year, maybe even 15, maybe even 20% of the profits. So you have to pay attention, you have to keep that in mind as well. The broker takes a really big chunk of your profits at the end of the year. It does add up to a really high amount. Okay, that's it for the pound. Let me see if I had any trade on the final pair I trade, which is the New Zealand Japanese yen. Let me see from the 1st of October. So the 1st of October is around here, and there was 0 trades I took on this pair. It's been more corrective. There were a couple of entries forming, but they did not fit my plan. Right here also a couple of them, but did not fit my plan. And it has just been flat. It has just been range bound. So that's it for this segment of the video. I will put in the screenshots of all of the trades I took from the MetaTrader as proof, of course, and let's move on to the next segment. And that would be it for the video, guys. If you want a 12-week mentorship program or one-on-one coaching calls, there is a link in the description to my website. All of the information is there, so hope you guys took some value, hope you guys enjoyed. Again, very nice trades this month, but it does not happen every single month. For me, as a swing trader trading the 1-hour chart, I only have around 2 or 3 very big months which cover all of my losses from the other months and then make me all of the big profits. So make sure you do not have false expectations, and good luck with your trading.